Yes, man. I know some people hate that music, man. What is going on? Let me pause this. I'm in New Orleans, so I run with one monitor, so I can't hide a lot of the stuff that I do in the background. I'm actually using two monitors, my laptop and one, but when I say one monitor, I mean one external monitor. It takes three to successfully put on a live production of me trying to explain the money flow to you guys. Appreciate the likes, supports, clicks. Obviously, nobody pays me to be here. Let me pin something. I'm actually going to kill I assume you can hear me on IG. Some of you guys that jump in regularly, if you could thumbs up and say we hear you without me asking, that'll speed it up, man. I can't tell if I'm being heard. I have to listen to other devices, and then when you do that, you get an echo. So it's constantly trying to keep up with things, testing new platforms. I got a platform I'm going to test this week. The problem is with the way I do lives, I move around a lot, and I flip through screens a lot. And some platforms, that's easier said than done in others. And some, even if I got to click multiple buttons to make that happen for you to see it, it really slows me down to trying to teach as well. You see a lot of big YouTubers, somebody's helping them do that. So they're just focused on one thing, but when you're trying to do it yourself, it's not as easy. And then there's a third platform where I'm seeing myself, and then the screen behind it, I can't see it unless I look on another one. And I'm trying to be on Instagram. So as you can imagine, that can be a little bit of a bitch at times, man. But that's all right, man. It's worth it. The money flow is an interesting thing. There's days I wish I would have called it something different. I'm gonna be honest. I say that word a lot. It's in my house, in my household. It's a phrase. Originally, that word comes from chapter 1 of my free ebook. You don't have to die broke. And a lot of times as you begin to study money, you start at the basics and budgets and how to spend your money. And that has always been less interesting to me as, say, trading and making money. While I won't necessarily sit around and write a budget, I'm going to be honest, I've never done a budget. And I know that's not good. I just didn't need to. Like, I could see it in my head. You know what I'm saying? And I would spend countless hours on stuff like this, on charts and in software. And I was, man, how old was I when I saw my first chart? And I mean saw your first chart, not some shit in high school. I'm talking about like when someone's like, hey, this is a stock, like when they pointed it out. And my story, and the reason I do this on Sundays where it's like the money flow is like, I'm just trying to get people to see the big picture. And during the week, I'll dig in and you'll hear me talking about anchor points and moving average crossovers and how to use indicators and individual stocks. My goal on Sunday isn't that. My goal on Sunday is just to convert you to the religion of being a stock trader or investor, and make no bones about it. It is a philosophy, a way of life. And the religious overtones is just a play on that to get across to you the commitment level that it needs to be, or the reverence in which you need to look at it. Because if you don't look at it like that, it's never going to be a central focus in your life, and you're going to have a hard time being successful at it because it's tough. It's an emotional thing. And it really is an emotional thing. Appreciate you guys. And so the more serious you can make it to where it's never an option not to participate. I meet people sometimes, well, I'm going to quit trading right now. Other than a slur of a profanity, I don't understand that. Because from the day I got hooked, I've never been unhooked. And I mean that. And I was lucky, I guess. I was first introduced to the markets in high school in my senior year. I took some, this is not me either, guys. I would never volunteer to do school. I don't volunteer to do shit that's not paying me usually when I was younger. Not that wasn't paying me, that wasn't getting me where I was trying to go. Let me rephrase that. and I was trying to date this girl, and she had to take them. So I took it, and it was an economics class, and the guy took us to the futures exchange, man. So I'm sitting at the futures exchange. It's the first time I was introduced to actual markets. But then when I'm home, I'd moved to Huntsville, Texas, and my dad worked with a guy who traded futures. And I didn't know what that meant. I mean, I knew what it meant. I just didn't know what that meant. And he did a thing, and he said, well, I can show you how to read charts. And he offered to teach my dad. Now, he wasn't teaching the money flow, what I'm going to show you, but it was the beginning of putting me on a quest, man, for like the holy grail of understanding price movement. And I know other people aren't maybe as obsessed about this as I am, but I'm completely obsessed with it. One day, one guy said to me, and here's the thing, I've made most of my money in real estate, but this is my hobby. When people say, when are you gonna do it for fun, man? When you're this, stocks, I think are fun. This is what you do on your day off. This is what you do when you're not at work. This is what you do, man. And the crazy benefit to this is it allows you to accumulate a lot of wealth, man. When your hobby becomes shit, people, you know what I'm saying? When your hobby's money, when your hobby's wealth, when what you like to think about and do is that, man, you're not working, you're having a good time. And so that was an advantage for me over other people. And everyone I know who's not obsessed with this has built less wealth than me. I don't know any other way to say it, man. I shouldn't say everyone. They're obsessed with some other thing, okay? I do have a lot of real estate friends that own no stocks that are very wealthy, so I shouldn't say it like that. But I became obsessed with this movement of price, and I began to believe that inside of charts, I could see something other people couldn't see. And I know that sounds crazy. And this guy originally who trained me, he said, hey, listen, and I wish I could do this to you guys because there'd be about 8 of us on here. He said, I'll show you, but you have to come to my house for every Saturday for like, dude, it was like 12 Saturdays. If you go to the petersreport.com and you go to page 10, there's a synopsis of the money flow, and it's this pattern right here, okay? And this is where that journey started. This guy said, you got to come to my house every Saturday and I'll show you for free. And he had been trading for years and years and years and years. And back then, you didn't get it on your phone. You guys are spoon-fed. It wasn't on your phone. You had to go to your computer if you had one, download it, right? We just got DSL. Tell you how slow shit's going. Like we just came off 56K modems where that shit. And you would download these charts at the end of the day. And one of the styles of trading was called end of day trading. We don't even talk about that anymore because the shit runs 24/7. 9:30, curse word. First one in church, man. So as I'm looking, he says, you got to come every Saturday for the next 12 Saturdays. Go home and tell your wife or your husband, yeah, hey, I'm not going to be here for the next 12 Saturdays because I met a guy that trades futures and he wants to show me how to do it. And I got to be there every day at 9 o'clock and he lives 1 hour from my house. That was 45 minutes. So every Saturday for 12 consecutive fucking Saturdays, me and my dad got up, drove 45 minutes, 45, 50 minutes to a guy's house to sit in his garage, and he showed me these things, charts. Now, when you get down here on my charts, these are charts, right? Charts are a window into the soul of the price movement. Don't take this for granted, man. I mean, people take this for granted. One time in an interview on a YouTube show, a guy said to me, what's your favorite possession? Now, you might think I might say, I don't know, my 1972 Gibson Les Paul guitar. I don't know, worth about $9,000. Just hangs on the wall. It's a beautiful instrument. You got a $9,000 instrument at your house? Most people don't, right? You might say a Rolex. Pretty nice. You got it like that? You got a multi-$1,000 watch just sitting there? Might say a car, man. Got a car I don't drive just on the weekend. Might say a beach house. Like you go down the list and say things that I have that are pretty nice that if you said, hey, you got to pick a possession. Not bragging, you got to pick your favorite one. It's the only one you get to keep. Start going down the list of things that you like, man. I got a number one Walking Dead comic book. Original, only 5,000 printed. long before the TV show. So you start thinking about things that you like, man. I really like my office. You know what I said to him? My favorite possession? Right here, baby. Stock charts. Not the business, not the company. They just got the name. I mean charts. Stock charts. This here. These numbers you see, the left to right. This view of window, November, October, September, October, July, June, July. You notice I'm only using ever about 6 months. That's all I need. The money flow happens on a day chart. This pattern here has been going on since the beginning of time, since the people have traded, because this has nothing to do with stocks, man. This is human nature you're looking at. This fucking psychology. 932. Psychology. This is the emotion of human beings, fear and greed. Nobody's ever told you this. Nobody on YouTube talks about this. Okay? You're in the fucking Illuminati right now. This shit here, this is human emotion, fear and greed. It's not logic. This is not based on economic reports and all the bullshit you see on TV. They were fucking lying to you. They don't know shit. And that's the one thing I figured out a long time ago. I was talking to the professor yesterday, and he said, Gerald, I finally get what you were saying. He goes, I got it intellectually, but I got it. It clicked. And it means I don't either. It's what sets me free, meaning I don't know what's coming. I don't need to know what's coming. I know the natural flow of order. I know the 4 stages of price movement. I know what I own, and I know the future. And here's what I know about the future. Over time, prices go up due to inflation, due to more people being born. There are more human beings on earth than when I was a kid. Oh, by the way, there are less stocks. By the way, they all need to retire. Hello? So, yeah, you can opt out of this game, but you're just opting in to poverty. That's it. And the world is smarter now, man. People in the ghetto are buying stocks. So, you know, it's the cat's out of the bag, so to speak. This game ain't reserved for the rich anymore, man. But that doesn't change this, the natural movement of price. And this is what makes this game better, is more and more people get into it. I can play this game for the rest of my life. I get $1 million in here, I can stay rich forever, till the day I die. You can too, man. That's the thing. And every day, you can get richer and richer and richer and richer. Now, the balance might go up and down. Good. We need price volatility. I need prices to go down so that I can buy, so that it can go back up, right? So if I'm trying to collect this, let me read you something here, man. I'm trying to save your life right now. Every day I come on Instagram, YouTube, trying to save people's lives. They think I'm kidding, man. I'm actually trying to save your life, man. You know, don't. And matter of fact, I'm so convinced of that, I give away my book, man. Here's what I found out. Jesus says better to give than receive. One day I'm thinking about that, and I watch Mark, and I go, you know, McDonald's gives away toys. Why do they give away toys? We all know why they give away toys. Get kids in there. Kids get in there, and mom buys some shit. But it's through that gift, man. Because let's say mom ain't got much money. Cool, let's go to McDonald's. Kid gets a little toy. I can get something cheap, right? It's that gift. Or mom could go in there and drop some money. It's up to her, man, right? It's that gift. So the gift starts the ball rolling. That's why I'll say, man, here, read this. If they read that, they should click. It should get. Fidelity reports that the average 401k, I'm not against 401ks, by the way. There are actually some good ones. What I'm against is people that have 401ks, and then when I say what's in it, they're like, that's what I'm against, man. So we got to learn what that is. Whenever I do one-on-ones, whenever they say 401k, I'm like, break that down for me. And if you can't, you got a homework assignment, okay? You got to break that shit down. What's it? Because sometimes it's invested in good things, and they match you, and it's like, cool, maximize that. By knowing that, we now know what the proper action it should be. But the average 401k, now listen, if you're self-employed, you can run your 401k right here, baby. Right here. Right? This is the S&P 500. Man, I can show you when to buy on this. You know? You could be like, well, I just want to buy stage ones. Good, man. Stack the money. So all here, you're transferring E-Trade, 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 E-Trade. Oh, stage one. Let's do some buying. Then it goes to break. You're what? Transferring money to E-Trade, 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 E-Trade. Oh, go do some buying. And then it starts to run. What do? Nothing. Let it run. And then what? Comes back down. Then what? E-Trade. Now money's being, right? And now we're buying again. And if you back up, what was happening? Okay? So during the, if you self-manage, if you self-custody, where are we buying, man? I'm only buying on the lows. Now, I'm still putting money in my account, so money's going in all the time, right? But I don't have to buy right away. But here's what a guy that doesn't know this game does. If he put money in this day, they're buying that day. Now, look at this. Everyone here probably knows about indicators. If you don't, just keep listening. Indicators like a flashing light on the highway. Starts flashing yellow. It's like, hey, look up. We're about to change lights, man. That's all this is. That's all that says, man. And so as I watch this, as I learn about indicators, which when I did my boot camp of 12 Saturdays, I bet most people couldn't even pull that off. Every Saturday for 12 Saturdays, you got to be there at 8 a.m. I don't know. Would your husband let you do it? Would your wife let you do it? Would you let you do it? Not that easy, huh? Unless you're obsessed. That's how I got wealthy. I just got fucking obsessed. Like a fucking lunatic. And so as I began to study price, right? And the nature of price in relation to this gold line, this green line, this dotted red line, this blue line, these are called moving averages. And the numerical alignment of these, look at this, 220, 10, 5, prices below it. Is there anything in the world more bearish? No, right? So as I began to watch price inside of the lens that I'm jumping ahead, but over my journey, I began to realize that price moved in 4 stages. When I met with that guy, he told me price moved in 3 stages. It was either going up, going down, or going sideways, and he was right. That's true. Price is doing one of those 3 things. And it was another guy that I sat with as I studied these. You notice my charts are in white as well, right? A lot of guys have black backgrounds. I don't like that. It's fucking depressing. I like mine to be bright, white, and clean. Meaning when I look at this, I don't want to see some black ass hole. I want to like white light, man. They said when you go to heaven, you're going to see a bright white light, man. Why are we going to make our charts look like a black hole? So no, I don't like it. Maybe it's my eyes. And then I don't use candlesticks, I use bars. So when you first sign up for this stuff, they give you candlesticks by default because a lot of people have switched to candlesticks. Man, you ain't got to do what you could do you, man. So I use bars because the guy that first trained me used bars. Back in the day, all the old traders used bars. It's the same thing. It's just a different way. I think this is cleaner and clearer. So my background's clear because it's white. There's where the stock closed, there's where it opened, and there's the high and there's the low. And for me, it makes it clear. And if you notice my 5-day exponential moving average and the 10-day exponential, not as simple. This is a simple and this is a simple. There's a difference between a simple moving average and an exponential moving average. And this takes time. You begin to learn all these nuances of this chart. Down here's volume. I don't do a lot of work with volume. I don't believe in volume. Some of my friends do work with volume. I put the RSI indicator on top because it's the most important indicator and everything else is second. And I put them in order of rank for me. So as I watch price every day, I know the natural order of price is it trends. It'll break above and it'll keep going. But that's come with time, man, of just watching price and the natural flow and movement of price. And I began to realize that price going down isn't a bad thing. It's not a good thing. Depends on your perspective. It's the same price, man. It's the same price. And I begin to figure there were things that you can say, but just over time, people have to get it. And I began to realize what's the difference in price from here to say here. Is there a difference? Well, that was at 150 and this was at 109. Do you have a different Is there emotion attached to that? But that emotion is your emotion, right? So if you, let's just say, for example, you didn't know and you had bought here and now the price is here and we're talking about the stock, you might have a different emotional feeling about this stock than I do, right? Well, what if I had bought the stock at $32 14 years ago? And over a 14-year period, now this stock ran at one time as high as up here, $150, right? So I'm up what? A lot, like 300%. Now you're just now buying. And if it comes down to here and I'm still up 200 and something percent and I've owned this stock for 14 years, does this mean, I mean, over the last 14 years, do you think this has happened before? So my experience with this stock is going to be different than a guy whose experience, say maybe he bought this stage one and it ran up. And so he's up really nice in the stock. And he's like, I really like this stock. And then it comes to here, maybe he has a different feeling about it. But if I'm up 250%, my feeling's not quite the same as his feeling, right? Notice what that is. Now that's all emotion attached to something that everyone's having a different emotion to the same thing. As you begin to think on that, begin to think on that. Well, what about a guy who bought it for the first time right here? Because if you came along, and watch what I'm going to show you here, man. Let's say you just met me, and you just read the money flow, right? And we're talking, and you're like, gee, okay, I get what you're doing here, man. I get the price. That's a breakout, right, dude? And I'm like, yeah, that's a breakout. And then I would ask you, I would come to you and I'd say, what do you think the stock is worth? You might go, I don't know. You didn't say anything about that in your book. And it's like, I know, but it's a quick and easy way. I mean, you know how much a car costs. Just fucking look it up on Kelley Blue Book, man. It ain't that complicated. Sometimes people ask me, well, how do I know rent? I don't know. Hit for rent with your finger. Like go to Realtor and click for rent. It's not that complicated. So understanding value of something is not that difficult. We go over to Morningstar and you type in the symbol and they'll tell you what it's worth. That doesn't mean it trades at what it's worth. Stocks don't trade at value. They swing in a pendulum. Looks like this. Up, down, sideways, and it's trying to find true value. And guess what? It never sits there. This is not how the market works because it's based on emotion, not logic. It'll go way too high and then it'll go way too low and then sometimes it'll stop. And in that pattern, it's doing this, and this is just price moving, man. This is like an eye, man. It's like an eye into the window of the soul of this thing moving, man. And you might look at this and attach all kinds of emotion to it. Like you may go read about the Federal Reserve and watch some shit on TV and talk to your buddy. And you get all that, and then now you come to the chart and you bring in all this baggage with you, man. Chart don't give a fuck about all that stuff you just read and thought about. Most people come to the chart and put in the chart what they're thinking. They're scared. They see it as a sell-off. You're like, what do you mean? Like right here. I see it all the time. Time to get short, right? Why? You had short in your heart, man. You don't know it's time to get short. Price is still above the 20-day moving average. It's still moving up. It's still on a stage 2. You don't know that's the top. The RSI hasn't gone extreme. It hasn't hit a target. Why did you all of a sudden flip to this way? They're not in the money flow, man. They brought filters with them, baggage. They're trying to push and input onto the chart what they feel and what they think. I don't see it that way, man. I'm empty. I'm agnostic, up, down, whatever. It is what it is, man. It'll be time to sell. The RSI will go extreme. Price will go sideways. It'll hit an apex point, and if it doesn't, it hasn't. Right? So I'm not trying to get ahead of it as much as I'm just trying to flow with it, man. And so, yeah, it could be the top. Maybe it is. Maybe it ain't. I don't know. Moving averages are coming together. We got an apex point, and we're starting to go sideways. So if I'm swing trading this, it is what it is, right? I need to start probably taking this trade down because we're hitting a stage 3. On that one we hit the RSI. And it's starting to build out a stage 3, which means we're probably going to come down, right? Not necessarily. We might break out and go up. So we'll see. 3 can become a 1. Man, look at this. Look at this orderly rollover here. right? What happened? All the moving averages, everything we expect lined up, man. We can go down the list. And in order, the same things happened on the way down. We haven't talked about the histogram, but if we were to pull up the histogram, and when did the MACD tell us this run was over? Right there. See that tick? That little tick right there? This is a momentum indicator. This is the only way I use this. It's momentum. So when you can draw a line on it, when it ticks the other way, opposite of the current move that's been going, what that's telling you is that the momentum to that direction is stopped. You know, it's not predicting the future. It's just telling you what is. And if we come look, it's pretty close to the high, right? And then the RSI is banging. And then what? It rolls over. So all the indicators inside of the money flow trading system said, alert, this is almost always the top. This is what it looks like. So if I'm a trader, I want to take gains, right? If I'm an investor, do I want to buy? Hell no. If I'm an investor, it's an alert. Hey, this is probably fixing to come back. So if I wanted to get in, now I need to keep an eye on it, right? So a lot of ways you could approach that, man, depending on what your goals are. Watch this. We're not even get into the fractalness of this, but watch this. It says it's been a tough year for investors for the 401k saver and investors across the board. The stock market has been horrendously, goddamn, that's a rough word, man. Horrendous. It's been horrendous. So horrendous. When you talk to your friends, they're like, oh, it's been horrendous. Meet strangers on the street. You're like, what do you think of the stock? Oh, it's horrendous. Horrendously volatile since the start of 2022. So horrendous. And as a result, a lot of retirement savers are sitting on lower balances than they were a year ago. It's horrendous. Fidelity reports that the average 401k balance during the third quarter of 2022 was $97,000. By contrast, the average 401k plan during the second quarter was $103,000. It's down $5,000. It's horrendous. Now, that quarterly decline doesn't look so steep. I thought you said it was horrendous. But when we compare the most recent average balance, oh, here we go, to $97,000 to the average of $126 during the third quarter of 2021, it paints an uglier picture. So in 2021, the balance was $126. Now the average balance is $97, which is what? What are we looking at? $30,000 difference. That's what, 20-something% decline, right? Let me let you in on something. Both of these people, that balance ain't that big. Just so you know. That ain't that big. That ain't that big. We got to 10x these, right? Now, guess what happens when you 10x it? It's not $30,000. It's $300,000. Now, if being down $30,000 was horrendous, what are these people going to do when they get some real money? Makes you wonder. So think about that, man. When your balances get bigger, the moves get bigger. You better get your emotions bigger, meaning you better do some damn self-therapy, man. You better do some self-help, man. I've seen people about to cry over 20 G's, and it's like, man, you think that was the difference? Man, you better get about 2 more million in there. I mean, how do you think that works, man? We need the volatility. If we don't get this big down move, right? If we don't get this, then we can't profit on the up. Now, almost everybody in the world intellectually understands that. Going through it and dealing with it is a different story, man. Let's see. Now, one way I've found to do that, to handle that, to help you with that is through diversification. That's why they teach diversification. That's a whole nother class. That's portfolio, man. Like, this is what the nuances of the market, the nuances of the money flow as you go forward in life, as you begin to learn every day, as you become obsessed with I mean, this is your money, man. I don't know why somebody wouldn't be obsessed with it. Now, the only problem with the 401k system is you obviously don't have as much control over when you add or when you trim. And if you start to lay that art over price movement, and we know that price moves up and we know price moves down, and if we know there's such a thing as a bear market and we can step back and we can see bigger pictures, there might be times when we have stuff run up, we might take some down. And that's part of the money flow. We recognize this is a stage 3, right? Accumulation. Do this, man. Go back and read chapter 9 of the money flow. I was just reading it through before I came on. Really good stuff, man. I say on page 142, go back and read 9, man. It's good stuff. To trade the money flow trading system successfully, you must believe that markets trend. Otherwise, not much point in placing trades using a trend following method. You don't need to know why they do, but you must accept that prices move in one direction, either up or down, long enough for you to notice it. Enter a trade, exit a trade, add to a position, trim a position, or just simply buy or sell when the trend begins or changes directions. It is generally accepted that all markets, stocks, commodities, even currencies, move in 4 stages. Here are the visual representation of the cycle. The cycle is fractal, meaning it works on a 5-minute chart or a monthly chart. Money flow trading system uses a daily chart, but the stages look and act the same regardless of time frame. And I've read it many, many, many times, and I have it right in the beginning of the book. Man, I think some of you don't know how much is in here. This is some mind-altering shit, man. The very first paragraph, I say a fractal's never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over again in an ongoing feedback loop. Driven by recursion, fractals are images of dynamic systems, the pictures of chaos. Now, if you saw what I posted on Instagram last night, the book I've been working on for a minute is called Chaos to Cash. And I talk about the chaos theory. Chaos theory states that no one knows shit, that the markets operate inside of the world. The chaos theory, meaning that we don't know, man. Sometimes you get it right, sometimes you get it wrong. You can flip a coin and be about as right as Ray Dalio. Just pick a direction. Like it's not that many options. And sometimes they'll attribute people to being some sort of financial guru. And it's like, well, let's see. Up or down. Like, and you got it right a couple times. Like, it's that simple, man. It can be that simple. And that's the crazy thing about it is it's that simple. Like I say it in the money flow that like trading is like super easy. Nobody kicks you out. Nobody keeps you from doing it. Nobody can stop you from buying something or trimming something. Like you can just blow yourself out. You can just margin it up. You could borrow on a credit card, deposit it into a margin account, buy 3x funds if you wanted to on margin, and go 20x if you wanted to, and nobody could stop you. And if you did that right here and you closed it out here using the RSI when you made decisions like that, you made that money, man. And you can make, this is the crazy thing about the market. You can make huge sums of money right there. Or you're like, wow, that looks pretty risky. I could lose it. Yeah. So that's the thing. You're in control of that, man. You're totally in control of how you want to play it and the risk that you take. But in all of that, no matter how you're approaching it, this plays. This plays. No matter what you're doing. So everyone in the world would benefit from the money flow, whether they did it the way I did it or used the trades that I use, the stocks that I use, the indexes that I use. There's so many individual variables. So I could show this to someone and they go out and make $1 billion, $100 million or whatever. They can do that. It's because inside of this, there's also stock selection. So if you're a good stock picker, right? If you're good at that, and nobody can stop you from being good at that but you. I don't spend as much time on, I shouldn't say that. I do a fair amount of stock picking, but it for me, it's more the same stocks and following patterns, right? Following patterns. Man, oh man. Let me slow down. Can't preach too much in church, man. Stage one. I used to call this basing. A lot of names for this. I use the term boxes a lot. That's a made-up term. I got that from a guy named Darvis. Darvis was an actual ballerina, kid you not, stage dancer who traded in the markets and made and lost a lot of money. A lot of the original greats lost all their money trading. A lot of them made a lot of money, and then they lost a lot of money. The Wycliffes, a lot of the famous people, the stock operator book, that guy lost all his money, made hundreds of millions and lost it all. Traders tend to do that. Gamblers can make a lot of money and then lose their money. If you do, as a trader, if you never develop the ability to be an investor, at some point you will give back all your money. That's what happens. But if you learn to gamble and trade with a certain amount, with parameters and rules, and when you hit money, you take money out, go invest it, come back and start your trading it. So you know what I mean? So you're not constantly trying to make the trading account larger and larger and larger because you're going to take on larger and larger risk. It's like, no, I got to get my gains out, invest that shit, and then come back to the table. And that's the best way to begin to look at trading and separating it from your buy and hold. But in stage one is really where the trades begin to set up, man. And what I figured out early in when I would short-term trade a lot, if I had stage one setting up, I would always go look to see where's the overall market. And I never really wanted to fight against the market. If the wind was in our face, meaning the market's very volatile and we're not there, it's not going up, it's going down, then I'm not looking to take long trades. And if the market is going up, I'm not looking to short. So I'd never be looking to short something if the market's moving up. I want to go with the flow, man. I want this shit to be easy because I believe that markets trend. Now, if you don't believe that, you wouldn't do that. But I believe they trend. And so I'm looking for easy trades. So in here, as a short-term trader, I would be dropping down to 1 hour so that I could jump this on the daily. Meaning you're going to see the money flow pattern on the lower time frame. And the stage two will happen first on the lower, and then obviously we jump to the daily. So if we back this up on 3M, looks like a stage three, right? Market's topping out. What if we take this to a weekly? What do we see? We see price breaking out above the 20-day moving average. Tried it once before here, right? And if we back this up on a lot of charts, you're starting to see stage two breakouts on a lot of charts on the weekly time frame. Look at the SPY. Now, it doesn't have to run. Didn't run here, man. But when it does, that's what it does. These big runs, I don't think we're going to see that. But they all originate and they all start with price getting above that green line. It's fractal, right? And so if we were to back this up to a daily, looking at a daily chart, which where I do all mine, when price breaks above that green line is the start of the moves, right? Start of the moves, man. Are they all for certain? No, look, there's one where it started, and then what? Then it gave you the opposite signal. But this is the pattern that I'm looking for, the setup that I'm looking for me. And obviously it's not foolproof or infallible because we actually don't know where markets are going. So when I'm looking at a stage one, I'm always going back, what was the previous stage? So when I start drawing this, if you're just now looking at it, it's okay, where's price? We're in a stage two. Price is above the 5, it's above the 10, above the 20. These are numerically ordered, and we're moving higher. Where was the previous? I always go back. Where was the previous breakout? So if this is a 2, that means we're inside of a 2/3, right? And I can just begin to draw the pattern. Now I'm in flow with the money flow, and that's how I would do it on any stock or anything. I would just start where I'm at right now and then backdate it. And as you backdate it, let's pull up. As you backdate it, you're in flow with the money flow, man. We're in flow with the money flow. Now, the last chapter of the money flow, I think it's page, 142. We talk about the first stage is formed after a prolonged decline. So in my mind's eye, whenever I'm looking for a stage one, what GP's looking at is this usually. Do I have a big down move? And now I'm looking for what I call the anchor point to start moving sideways. And then once that takes off, then I know, okay, now we're over here, not a lot for me to do. So I'm always turning my attention of just as a general rule, if I'm looking for something new, I'm always looking for something that's putting in an anchor and starting to move. That's what I'm looking for. And if the market was going straight up and everything's going great, I'm still looking for the same thing. Except in a bull market, I'm going to have less of these, which is cool. Where in a bear market, I'm going to have shit tons of these because we're getting smashed, right? So it's easier to trade, obviously, in a bull market. The first stage is performed after a prolonged decline. The stock or commodity starts to move sideways after forming a base. The sellers that were once in control are losing their grip and the buyers are showing up. So here's a recent example. Man, oh man. We know that price on this side of the green line is a stage 4 decline, right? We know it tried to base here. Now, one thing I want you to notice about that base, and if you trade with me long, you know, I don't trust these, man. You know, that's not extreme. I don't trust those. I like them to be deeper. That's just me. Doesn't always mean it has to be. Doesn't always go extreme. But I know when they don't go extreme, it's not a completed bottom. So that one went extreme to an extreme. And in there, you know, we started to go sideways. Everything else went, but it just never got going, you know. So we never had our breakout. And if we look, we started doing it again with price going sideways. We got our anchor point. I mean, classic one. Got our first buy signals. Now price is going sideways. And so as I watch this, you know, I know what the commodity is. We could sit and break down all these technicals. Price is now moving to the other side. Now, I don't know where it's going to go. I know when it changes directions and when it goes higher, this inverts, meaning price gets on the other side of that 20-day moving average, the numerical, the alignment, the 5-day to 10-day exponential cross, price is above them all, and then you get price, 5-day, 10-day, 20, and then price begins to drift up until it's hit by some force. And usually that force will be that it hits an apex and the RSI goes extreme, when that signals to all these other traders and people all over the world that this price has gone too far too fast. It's all that measures is velocity of price, which is what they were talking about in the 401k. The horrendous, what they referred to as horrendous volatility, is actually called the 4 stages of price movement. And some people are just, I don't know. I want to call them names. Some of you get mad. Why do you call people stupid? That's not nice. You shouldn't do that. So I'm not going to do that today. And it just goes down. And they're like, it's terrifying. It's like, actually, just call the stage 4 decline, man. And that's what it does. It's the orderly movement of price. And once you understand this, what they call horrendous or chaos, we just call the stage 4 decline. And there's a difference. Now, if you're freaked out, or like, oh my God, and I'm like, nope, just stage 4 decline, we're looking for an anchor point. Well, that approaches this a lot different. So if I want to invest in the S&P 500 for the rest of my life and try to get millions of dollars in there, I need people to freak the fuck out. And I need the market to come down, and I need it to be volatile, and I need it to be horrendous at times, just horrendous, so that I can buy these ones, man. If it doesn't get horrendous, how the hell am I going to get it on sale? Right? Now, a lot of people were complaining about housing. Oh, the houses prices are too high. They're just incredibly too high. All of a sudden, they start to come down. Then they're like, man, you think I should buy it? I'm like, well, it's not as high as it was. Where do you want it to be? Then they're like, well, I can't buy now because they raised the interest rates. And it's like, God damn, man. When is it that you will buy? When they were too high, you didn't want to buy. Now they're bringing them down. You don't want to buy because of interest rates. What would be good for you, man? Let us know. And that you're going to see people do that, man. They're always going to. So whenever you get someone who's like, well, if it ever crashes, I'm going to buy a shit ton. Bullshit. You are not. Because when it happens, guess what? If you wouldn't buy it when the times are good, you ain't buying it when times are bad. You're going to find a reason, an excuse. It happens, man. I'm telling you. But you know how you overcome that? We just buy stage ones. And so if I have a buy and hold position, I don't know. You're like, is this the bottom? I don't know. The bottom right now. Let me get some. We could do this for 30 years, man. Shit, take it to zero. And then I'm going to do it on the way up, man. And what happens is over time, through the power of compounding, you go higher and higher and higher, man. That's what happens. So that balance, I need to go from 97. I mean, what are we going to do at 127? We're just going to keep paying higher and higher prices for stocks, just keep going higher. That doesn't make any sense. So I need it to come down, right? It just comes down fast. And what this gives you is a logical way to enter, right? Once I can determine anchor points, once I can determine the anchor point and the apex, and understand the stages, and understand value, and the moving averages, and the alignment, now I have superpowers, right? Now I have a different way of approaching the markets, man. Man, oh man, oh man. We got 143 people on YouTube and 87 on Instagram. I might need to cancel Instagram. Actually, I can't do that. The way you get people to YouTube is via Instagram. So everybody that's on Instagram, it's usually a better experience on YouTube because you can see the whole screen. You got a beautiful picture of me there in my office. You can watch it on TV too. I don't save them on Instagram. I save them on YouTube. Let's see. So tonight, you got to do homework, right? So tonight, what you should do, I never did update mine in the newsletter. This was more for homework than. These are my notes from the 6th. I just realized I never updated the page. Sometimes I do it and then I never actually click the update button. Do it on a piece of paper. Do how you want to do it. Go through your stocks. If you're trading with me inside the money flow, and we have our stocks, go through them. Now let's say, I don't have a lot of money in them. It don't matter, man. You ain't got big muscles, and you go to the gym and lift weights. Guys like, well, I don't have enough money. You ain't got big muscles, and you go lift weights, man. Like you do all kinds of shit. You're not the top. So when you're doing stocks, just because you don't have a lot of money shouldn't mean you treat it less, right? You can still go through, and you are not this busy that you can't look at every one of your stocks tonight before you go to bed. If you can't do that, you suck, by the way. Seriously, big S. Just go in the bathroom, pull out your wife's lipstick, and write on your forehead, just write it, right? That's all you need to do, or your own lipstick, and just write it. Because this is not complicated. And you can take the money flow and lay it over these stocks you own, right? Or trade you're in. All that stuff is here. And we're going to do it on a piece of paper. Oh, back up, man. And to yourself, man. And just think, okay, I could take some gains from these. And then I go a little further and say, this is currently trading at fair value. This is actually trading under value. And this is trading over value. And so that kind of helps me decide, too, if I want to trim something. Now, some stuff I just stop trimming. There's no more trimming it. This is my core. Like McDonald's, I'm not trimming AT&T, even though it's on an extreme. Right? Gilead, I did trim. So as I learned the money, okay, so right, same way I'm going to do nat gas trade where I have targets and shit. I've been building Gilead for almost 2 years. Now, during that 2 years, well, I got to stop trading right now, man. We got all this stuff going on at work. Shut up. That dude's going to be poor. I promise you. This is not something you fit in if you have time, or if you got stuff going on. You got other stuff going on besides managing the money you've made in life. You really are doing shit wrong, okay? So this needs to be super important to you, whether it's through a 401k, whether it's through managing and custodying it yourself. But this stuff is important. Now I don't know. I've been building it for over 2 years because the stock got super cheap, and it was down here in the 50s, paying a 5-6% dividend yield. And for 2 years, been buying stage ones to the point where it's like, do I even need to I get bored texting it to people, buying more Gilead, right? And look at these money flow patterns on the weekly. It's fucking amazing. But we had this long period where price, dude, look how long it's been in this $50 range. Look at that. Now, if you met me, you might be like, oh my God, look how long it took, 2 years. And it's like, yeah, look at the size of the position you could have built in 2 years. 1 share here, 2 shares there, 1 share here. And then what? Now what? The position explodes, and now you can take gains, and it should, could be in the tune of thousands, and then you roll that money to other positions that you think are undervalued, man. And that's investing inside of the money flow. We would take gains in what? Stage 3s, man, which is right here, right? And it's a stage 3 where now the price is fairly valued or overvalued. It's actually trading at a premium. And so I would scale it back, man. I would take some gains. And that's a successful money flow investment, man. Now you get to pat yourself on the back. Look how awesome I am. Now let's do it 50 more times, right? And now we're going to keep some of this. We're going to keep most of it, right? So I'm going to keep most of it. I'm just going to sell like 10, maybe 20%, depending on how big the position has gotten. Well, if it's taken years and years, it might be pretty damn large. So we would downsize it, right? I got the same trouble in, say, Exxon. Spent a lot of time buying the stage ones, not really giving a shit about the news, don't really care what you think or what's going on with Ray Dalio or what the feds are doing. It's a core position inside of my portfolio, Now, look at the difference in this. I have to remind all my people hating on Bitcoin right now. Yeah, we'll see. We'll see. I got the same shit when this was down here. Got the same shit. People literally quit in our group. I'm like, man, you better buy Exxon, stage 1. Had a guy once say, I don't need to have someone let me know about this. I can see these crappy stocks on my own. Okay, well, do that then, bro. I don't know where he's at now. I don't know if he's cashing them in at 112 or not. I don't know where he got off, but the point to this is how markets move, man, and they take time. That was, this is like over a year, man, of these stocks sucking. Yeah, bring down Bitcoin, whatever. And you guys bump into people who are like telling you, I ain't telling you, those are stupid. Don't listen to those people, man. They don't know what the fuck they're talking about. So all they're telling you is they don't take risk. Good, stay poor. Don't take risk. They can't keep up with technology. Good, don't keep up with technology. The fact that the price of something goes down isn't make it good or bad. So if you bump into people who are saying that, these people don't know what they're talking about, man. It's good or bad. You can't base good or bad based on the price something's trading at, man. You don't know when I bought it, man. Right? You don't know what my goals are or where I'm going. I don't give a fuck what the price is today. It's in the future, man. Over time. That's how time times amount times yield. That's how you get rich, not today. So a lot of people are confused. Again, like I said in the beginning, they attach a lot of emotion to what they paid for it and where they got it. I don't care where you bought it. What does that got to do with me? Get it? going forward. And if that guy doesn't know anything, that's the first order. That's the first rule of chaos. Nobody knows shit. So he don't know anything. So anybody trying to tell you they knew something, they don't know anything, right? They don't know anything, and they don't know what they don't know the money flow, and they don't know where it's going, man. So bam. So I don't put any, and I've been trying to tell people this, don't put any sort of self-confidence or self-worth in the price of a stock or an asset. It's the fact that you'll do it consistently over time and trade it. And you're trading for a long period of time, man, not today. So your team could lose today. That don't mean you're not going to win the Super Bowl in 3 years, you know? So if you let that stuff knock you out or get you off your horse, you're going to have a hard, long life, man. You better ignore these people. They don't know what's going on, man. So keep that in mind. Here's what I know. I don't know what they know. I know this. I know prices move in 4 stages. I've spent way too much of my life studying it, about 21 years now, every fucking day watching the stock market. And I have never met another human being in person who watches the stock market more than me. Ever. Like in person. Everyone I meet knows less. I rarely bump into a human being who knows more about the stock market than me. I'm not saying there are not tons of people that know more than me. I know there are. I'm saying the people I meet at the gym or at work or at Starbucks, they're all stupid. They all have no money. They don't. Very few of them do. And the ones that do, their mom and dad gave it to them. You know, it's rare human that you bump into who's tracking like this. This is in my living room at my house. You don't have this in your living room. Your wife's not going to let you put this in the living room. Most of you don't have this in the living room of your house, like whiteboards, and you're tracking. Nobody's more fucking obsessed on planet Earth than me. Nobody. Now, you might say, well, I know a guy, fuck that guy. I am more obsessed than he is. I'll outwork him, think him, and if I fuck up and it goes to zero, I'm back the next day. That's the difference. Other people quit. I don't quit. Never going to quit. I'm going to do this till I die every day. I might be fucking penniless, and I'm going to be writing up on this board, like what's happening, where's the Dow, where's the S&P, where's NASDAQ, and maybe it won't be Bitcoin. Maybe we'll add some other thing here, right? And things come and go in this world. These stocks come and go. Some things go out. I had a guy tell me the other day about, well, you don't talk about your losers. Yeah, I'm also not rubbing in your face 5,500% returns in some penny stocks either. Like, that's over, man. So what am I going to do? Sit around bragging on 7 companies that were taken private? What good does that do for you now? No more than me sitting around talking about losers. We're trying to find winners. Every day I wake up, I'm looking to be on the right side of the market. And guess what? That doesn't mean what I bought. So you notice, like, I haven't been buying a lot of crypto. Why? It's going down, dude. So let it stop dropping. Duh. Right? So if you notice, for a long time, I wasn't buying any growth stocks. Why? They're dropping. We don't want to buy those. Doesn't mean I want to sell mine. But to keep saying, I own PayPal, I got to buy PayPal. No, you don't, actually. You can just hold your PayPal and then run over here and buy some, I don't know, buy some Campbell's. That's going up, right? Buy other things. And so we focus on other things when the time is right. And then we come back to those things because we're doing this forever, for life, right? So if I'm doing it for life, this stock is breaking out right here. Campbell's is breaking out right now. And if you remember, we were talking about this breakout. I'm not going to buy something that's not going up if these stocks are breaking out. And so as I play this game going forward, and there's going to come a point and these aren't going to do well, and they're going to start to come down, and other stocks are going to take over and be the new, well, if we can get in there, let's get in there. And this is how we build it out. And this is how you diversify over time, is you start buying new things as you see them, okay? And keep the old things if you have them, man. Let's see. Yeah, man. Campbell's looking like a champ. This was the very first stock I posted about on social. I put it on my story the other day. 2018, I was telling people, buy Campbell's soup. Nobody wanted to buy Campbell's soup in 2018. Nobody. Not one of you on here was like, oh, I think I'll buy Campbell's soup. Nobody wanted to buy Campbell's soup. It was fucking Dogecoin and Shiba and all kinds of other bullshit. All it is, it's all people want to talk about is nonsense. Just more nonsense, please. I'm like, you should buy Campbell's. Yeah, it looks pretty good now, doesn't it? Now you think, well, when are you like some kind of prophet? No, I've been doing this every day for like 20-something years, man. There's nothing new under the sun, new fuckery. It's new stocks, new this. Everything it's the same old shit, man. There's nothing new. You didn't bring anything. You didn't invent anything. It's the same stuff. And it's this market's moving in 4 stages, man. This is the same stuff over and over and over, but things come in different, man. They add new things. And so that's great. We can trade those things, but we can also build wealth on the foundation that it's the same over and over and over and over. Man, what a beautiful life. Look back, we're going down more. First time again for you. So, he says, are you live on YouTube? Yes, sir, I am live on YouTube. I promised I wasn't going to call anyone stupid. Apparently I did. I got into the flow, man. I didn't even know I did it. I apologize. Where are we at? Now, not saying run out and buy Campbell's now. It's actually fair valued. I wouldn't be playing it now. We wanted to play it back here when it was cheaper, okay? The point to that is we wanted to play it when it was cheaper, like way back in here if possible. So, man, what a beautiful Sunday that was. Don't give me your tickers during church, man. I don't give a shit about your stocks right now. That's not what we're talking about, man. We're talking about the money flow, the big picture, the overall picture of the money flow. So that's your job. He says, what do you think about this? Your job is to put it on your board, on your piece of paper. So you should come up with a couple trade ideas this week. You don't have to execute on them. Just think on them. A couple trade ideas. So a couple B&B trade ideas I've got right here, right? That I'm watching. Doesn't mean I've executed on them. I'm waiting for the right setup, man. That was Cube, BX, and ATV. Natural gas, so we acted on that one, right? Looking at top tier growth plays. That may not, this is from the 6th, so this may change. Any dividend setups doesn't mean I'm going to buy them. I'm just writing them all down within my portfolio, what's setting up, because some of these 3s that I could trim, I could add to these. Depends on their size of the position, right? And I want to rank the win. And if I go through this and I'm doing this all the time, man, you're going to be so in tune with the markets over the weeks and months and years. Man, oh man, oh man, oh man. All that money you're going to make. All right, man, I appreciate you guys. Hey, I got a bunch of hard copies in of the money flow in my first book. So if you want signed copies of both, I can get those out to you. My man says, what does B&B trade idea mean? Man, imagine if you were in the money flow gang. You'd know all that, man. You'd have them all. You would know what that means, man. Let's see. It means bread and butter. It's a strategy inside of the money flow. What's up, Manny? Appreciate you guys coming today.